everybody, welcome back to the channel. Today we've got Jeremy from CopAur Minerals. For our Canadian investors, that ticker is CPAU. If you're one of our American friends, COPAF. Jeremy, thanks so much for coming in to talk to us today.
My pleasure. Good to be here.
So, I'm certainly familiar with your company. You and I we've discussed at length, but for somebody perhaps new to the story, do you want to give us a quick little overview, background, what it is you guys are all about?
Okay, sure. We're we're at a gold exploration company. We've got 4 projects. We have one that's advanced project. It's not like we're looking to find something. We actually found some very high grade gold in Nevada, and we have a deposit, and we're looking to try and expand the deposit so that it can be economic for perhaps another company to come in and produce it, or if we have to, we'll produce it ourselves, but I don't really want to do that. The most money that you can make in the least amount of time is by selling one of these projects off. And so that's really what we want to do, is make discoveries. And we have, like I said, 4 projects, 3 in Nevada, 1 in British Columbia.
Excellent. And let's talk a little bit more about your background, as well as the Metals Group. So, I've heard that you and John Williamson, you're the founding members of the Metals Group. Do you want to just tell us a little bit more about, your backgrounds and why you guys actually started this Metals Group?
So, John Williamson is the leader of our technical group. He's the guy that puts together all the mining engineers, the geologists, the structural engineers, all the people that you need in order to advance the projects. Whereas I head up most of the capital markets stuff, raising of money, listing companies on the stock exchange, getting them on various exchanges. Some of them are on, exchanges in Germany, in North America, Europe, so forth. And so John he was one of the founding members of another group of companies called the Discovery Group. And so the Discovery Group has a real history. They built up and sold off 27 publicly traded companies in a row. And if you look at the history, this isn't promotional. This is a historical fact. If you look at when they started those projects, they didn't all go straight up. They kind of bounced around. But if you got involved when John was involved to begin with, and you sold out at the end, I think that the worst one that they did was about 300%. And some of them had just extraordinary rates of return. Like some of them were over thousands, 5,000, 6,000%, I believe was one of their best ones. And so John went into retirement. I drugged him off a golf course a number of years ago, and he and I started working together. I have a skill set that's different than his skill set. And obviously he has a skill set that I don't have, so it became quite complementary. And one of the things that when we first started working together, I think what makes our group of companies, not necessarily just CopAur, but our whole group of companies different than most, is that mining is an extremely difficult business. Like it is, the odds of success are terrible, really. It's really, really difficult to advance these projects along. There's so many things that can go wrong, and there's very few things that can go right. So in order to be successful, phone ringing here. In order to be successful, what you have to have is extremely smart people, very, very good technical people. And so the frustration that John had in his previous existence was having all these technical people, creating relationships with universities and so forth. And you get all these technical people, really smart guys with their PhDs and multiple master's degrees and all these different disciplines that you need in order to move these projects along. And he'd build his team and he'd bump the project along, and then he'd sell the project off, and there would go his technical team. And so he'd be stuck at square one again, and he'd have to go back to the universities and so forth and, schmooze all these young guys and try and get them back into the next company. And then he would do the same thing. He actually, I joke about it, but it's true. he had one incident where his own son, who's a very, very, very smart geologist, graduated from university, and he hired him in one of his companies. And then when he sold it off, there goes his son too. He couldn't even get his son to come back and work for him. So
No kidding.
sold his kid off. Anyway, I wish I could have done that with my sister. No, just kidding. So anyway, he said when we first started working together, he said what he'd like to do differently is have a parent company, a holdco, where we have our technical guys and they're not connected directly to the publicly traded companies. Some of them will go and actually work directly in these companies, but for the most part, they work in Metals Group. And it's not for profit. It's not like we're trying to make money off of all these public companies and overcharging and all that. That's not the purpose of this. The purpose of this is to keep our technical guys so that when we bump these companies along and then we sell them off or the project's off, we don't lose our technical guys. And so we've been able to get a really, really good group of technical guys that we're comfortable working with. We actually kind of like each other. We get along good, and it's a good culture. And now we don't lose them every time that we sell off one of our companies. And I think we have a couple of our companies that are probably going to go this year and be sold off. And so CopAur happens to be just one of our group of companies under Metals Group. And I think that it's probably one of the most leveraged to making a discovery. It's got the tightest share structure. It's got 4 projects in it. It has one that's advanced and really high grade. So I think that if one of our companies hits this year, the one that has the greatest potential for gain or leverage would probably be CopAur. So there's a little background.
So that makes sense. Your description pretty much answered exactly where I was going to go next. But if we had to kind of do a couple bullet point highlights of, what are some specific advantages that a company like CopAur would get by belonging to the Metals Group? Obviously, having a consistent technical team, but specifically for CopAur being part of this Metals Group, what are a couple of kind of key highlights and reasons why that's a benefit?
Well, okay, so I think what we're getting at is what makes CopAur stand out. And so what makes CopAur stand out is the fact that, here's the fact is that I am the founder, not just one of the founders. I am the founder of both Benchmark Metals and Thesis Gold and CopAur. Those are our companies that are operating up in northern British Columbia.
Those are all name brands, big name brands.
And I could have chosen to be on the board of directors or perhaps even led those companies, but I chose not to, and I chose to jump on to CopAur because, again, it has the tightest share structure, and it has these 4, not just one, but 4 projects. And so any one of those projects, all 4 of them have the similar potential to what both Benchmark and Thesis have. And so by making a discovery and also by having the leverage of this brain power with Metals Group and some very, very good advisors that, we can leverage that information. And so I would say that that's what sort of differentiates CopAur from perhaps our other companies. And again, when I talk about structure, CopAur has about 60 million shares outstanding. I think Thesis is pushing close to 90 million shares, maybe closer to 100 million shares fully diluted. And so and Benchmark is like 250, 260 million shares outstanding. So by comparison, it's super tight share structure. Not just one project, we have 4 projects. And we also have an advanced, really high grade drill results from in Nevada.
Okay, so that makes sense. So then, okay, let's talk a little bit more about gold specifically. Clearly, it's a strong gold market with the price sitting somewhere around $2,000. I didn't see where it was at today, but roughly in that region. So we're also seeing these major gold producers obviously having strong cash flow for years now. Do you expect, if we were to talk about M&A, what do you expect to see in the M&A cycle? And how would that affect, let's say, junior miners like CopAur, for example?
Well, it's already starting to happen. We've one project that I was part of, not in any official capacity, but one project that I was part of, consultant for and raised money for and was an investor in and worked at it, was Pretium Resources, which is also, by the way, up in the same area that Benchmark, Thesis, and CopAur are. It's just we're on the western side of the Bowser Basin. This project is we're on the eastern side of the Bowser Basin, rather, and Pretium is on the western side. It was just sold to Newmont, or Newcrest Mining, rather, for about $2 billion. And that project was IPO'd and started in 2009. So again, you're not looking at people that haven't put these things together before and sold projects off. Like I said, John Williamson, my business partner, has been a part of, I think, 27 publicly traded companies and sold them off. And what happens with the price of gold? Gold is frustrating because, as much as I love gold, and we're talking about a gold company, it frustrates the daylights out of me because, there's every reason in the world right now for gold to be about $5,000 an ounce, but it never seems to get there. It's frustrating. We have a war going on in the Ukraine. The United States and Canada and Britain and every other country is printing money like a bunch of drunken sailors and debasing our currencies. And so I can't understand why, for the life of me, gold is not $5,000 an ounce. I'm happy with it being at $2,000. Everyone's making good money, but my thoughts are that it should be significantly higher than it is right now. But even at these prices, it's very good. As far as specific like M&A activity, sure, the majors, every time they go mine these deposits and they bring out gold, there's less gold, and they need to replenish their supply, so they have to buy. They're forced, in order to both grow and to expand, and just to keep their current cash flow, they have to acquire new projects, and so that's why they're terrible at exploration. And junior companies are better at doing exploration than majors, so they're going to have to come. And we've got 4 projects, and we also have majors. I've been on the project on our Kinsley Mountain project this year and last year with majors that are closely watching what we're doing, and they're also operating right in within 25 kilometers of where we are. They're already operating, and they have mines that are depleting, and they need new resources. So they're looking at what we're doing carefully.
And okay, so I want to talk about Kinsley, but first maybe let's break for a quick educational moment, just because I'm curious. When you're talking about a company like CopAur getting acquired by one of these majors, what are kind of the steps that you have to take that get you to the point where they'd seriously consider writing that check? Like, what do you have, like, a major discovery, like for somebody that doesn't, is not like an expert at mining, like what's that catalyst, I guess, if you will, where a company would be ready to write a check?
That's a great question. And so it's different for different companies and different types of deposits and where they are and so forth. In a place like Nevada, and we'll talk specifically about Nevada, and I can maybe contrast it with maybe British Columbia. British Columbia, in order to sell a project in British Columbia, you have to have a massive world-class discovery. You have to do all your environmental work. It has to be done. You have to have relationships with First Nations already ironed out so that there's no issues, because a major is very concerned that they're going to go spend $500 million to buy this project and then spend another $1 billion to put it into production. And then all of a sudden, the local community doesn't want it and you can't ever put it into production. So they are paranoid. British Columbia and Canada in general is a difficult place to operate. It's not impossible, and it's not impossible to put things into production, but it's a challenge. And our governments here, don't push the rule of law. They just, cater to whatever communities really want. In Nevada, it's a little bit different because all the majors are mining in Nevada. Almost every major has got projects in Nevada, and it's easy to permit. There's no First Nations issues and so forth. You have to follow all the environmental laws, but you can operate there a little bit easier. And so, like for instance, in British Columbia, it would be difficult to sell very, very difficult to sell a project less than 1 million ounces. Who's going to buy that? They're probably not going to. Whereas in Nevada, you get 700,000 to 1 million ounces, 1.5 million ounces. That is easily a sellable project. And majors are interested in something like that. And so what you have to do is do good technical work. And so that's part of Metals Group. We've got a group of guys and smart technical people that when they produce the results and they present the results, and we have very good software so that when third parties come and look at it, they have a great deal of confidence in the work that we've done. Whereas if it was done by a guy like me, there'd be no confidence, but because our technical team is so good, there's a high degree of confidence when a major comes in and looks at it. They go, okay, this looks good. Looks like it was done right. It was, and the information is laid out correctly. And the software that we use is good. So they have a higher degree of confidence. So I hope that answers your question to some degree.
Yeah, it does. That's actually really, really helpful. So now we can talk about Kinsley. So that's the flagship property. Why don't we dig into that a little bit? Tell us, why do you believe specifically, I know you believe that the size and the grade of the gold deposit can be increased here. I remember that being something really interesting you told me about before. So let's dig into that a little bit.
So Kinsley Mountain has, it has two types of gold on it. It has an oxide gold on surface, which is that oxide gold is easily processed. You just basically scoop it, crush it, and then create like a bathtub kind of scenario where you sprinkle cyanide on it, and then the gold gets leached out of it. That's oxide gold. And so there's some areas on. There's lots of areas. There's lots of oxide gold across the property, and used to be past producer. However, what happened was they sunk a couple of holes deeper in this one particular area called the Western Flank Zone, and they poked this zone of mineralization. So imagine this is the ground up here, and then you go down approximately 250 meters, and then down here is this pocket of gold. And that is, it's called the Secret Canyon Shale, which is, by the way, there's another project that was just northwest of this called the Long Canyon Mine, which was sold for a couple $2 billion to Barrick and Newmont. And it's in the same band of rocks that we're in. Anyway, they put a few holes in this prior to us acquiring this. In this area of our project called the Western Flank Zone, and they hit some spectacular grades, like crazy grades. And in this zone, it starts, the top of it is at about 250 meters, and it goes down to about 300 meters, so about a 50-meter zone. And I say approximately because it's sloped a little bit. Every drill hole that pierced that zone came back in that area, came back at, I think some of the worst grades were about approximately 8 grams per ton. And it went up to as high as 50 grams per ton in that zone, which is spectacular.
Well, and for context, what would you consider, what is like an average grade?
Good grade of gold is maybe 1 or 2.
So 8 is okay, sure.
8 is spectacular.
Truly, okay.
Wow. And 50 is even better. so yeah, if you have a big deposit and it's a 1 gram of gold, then you have, and particularly because it's open pittable, you can mine right down to 0.5 gram, even 1/3 gram of gold in many cases. So to have 8 grams per ton. Anyway, what happened was they drilled out and created a resource in this area, and they came up with about approximately 411,000 ounces of gold, and it graded 2.6 grams per ton. What's interesting about that, though, is that if the grade is 2.63 grams and every drill hole is between 8 and 50 grams, there's something wrong. And I'm not saying that it's inaccurate, like that it's not accurate. I'm just saying that there's something that's incomplete. And what we think has happened is that there's some gaps in that resource that they created. And simply by us doing more drilling into it, it should raise the average grade of the resource up. And by having the average grade go up, that should increase the number of ounces. And plus, we also think that they haven't fully exhausted how big that zone is. So we need to do more drilling in that area. We've also identified a whole bunch of other projects or a bunch of areas on the property where it looks like the geochem and the geophysical signatures look like there's more of those zones on the property. I know that I probably should talk a little bit about geochem and geophysics, what that actually is at some point.
Well, one thing, okay, that I just, and correct me if I'm wrong here, I want to know if I got this right. So I recall you saying something like, if there's a gap between drill holes, let's say a significant gap, so that's counted as like 0 ounces per, okay. So if there's just a limited number of drill holes, then therefore the average will be low, even if the few drill holes there are is really high. So by punching in more drill holes, that would bring up the average grade of the whole resource. Is that, do I speak mining now? Excellent. Good.
That's correct. Yeah. So if this is a drill hole here, and this red part is the zone, you drill down, you get into the zone, you can only use the material that's like close around that drill hole. If you have another drill hole over here, all this material in between is 0 value, even though there's probably something there. If there's a drill hole here and a drill hole here, there's likely something in between. And so, but when you're, for the purposes of doing a resource calculation and trying to do like a very detailed resource calculation, you can't actually count the material between those holes if there's space too far apart. You have to give it 0 value. And so we think that that's what has happened. We found some areas where there's 60, 70 feet between drill holes where there's nothing. And therefore that material, whatever's in there, is not counted at all in the resource.
Okay, so that's super fascinating. So I guess the next step in terms of drilling at Kinsley, you guys, you closed a financing, you announced like a fully funded drilling program. What are the kind of next steps that we can look at? Like, let's talk about some milestones for that project.
Well, the drill could be turning right now, actually, or maybe tomorrow. Like it's the drills are on site right now, and I think we have, again, we got to do what we're supposed to do. So there's a little I don't know what they call it, but basically we have to study some birds out there right now before we start drilling to make sure that we're not disturbing any wildlife. Anyway, so the drills will be turning here in the next couple days, if they're not already turning right now. And so the next steps are we're poking some holes. We've carefully analyzed where to put those holes between some existing holes. So it's not like we're taking big risks here. We're actually going right in between known drill holes where we know the grade here and we know the grade here, and we're going right between them. And we're pretty certain that our first few holes are going to be spectacular. Actually, that's my expectation. It's not a guarantee, but I'm quite certain we're going to have some very, very good drill holes. Like some stuff that is, just to put it into perspective, there's very few companies that I have ever seen that have a market cap. Actually, I've never seen a company that has a market cap as small as ours, with the type of drill holes, the historical drill holes that we've had. Not even close. They're usually 4 to 10 times, 20 times the market cap of what our company is. So there could be, it could be spectacular if we hit on these holes, and I'm pretty certain we will. So that's the start. We also have some oxide areas, which those are cheap, easy holes to drill, because instead of going down 250 meters, you only need to go down 100 meters or so. And it's also different kind of drilling. So we're going to be popping a drill, bouncing around, collecting up some of the oxide material that's on the surface, and expanding our oxide production or our oxide resource. But we're also going to go down a couple of big holes into the Secret Canyon Shale to expand on that as well. So we should have results within 6 to 8 weeks. I would say we'd start getting some stuff back. Yeah,
that's fast. Okay, incredible. And so, okay, you clearly have multiple projects to work on. I'm just curious though, for the future, if we were to talk about acquiring other assets, is that something that you are considering? And if so, what's your strategy around identifying and acquiring these other assets?
So right now, what I'm our project in northern British Columbia too. I haven't talked about that. We made actually a discovery up there last year. There was historic drilling. We didn't know exactly where some of this drilling came from. We made a discovery. We drilled a beautiful drill hole last year into this zone. So we may actually even spin that project out. That's called our Williams property, which we have 100% of up in northern BC. We may spin that out into a separate company. And so shareholders of CopAur there's a possibility, get shares of another company, of a new co with that Williams property in it. And then we go drill that. Or conversely, we may later on this summer. It's too early to start drilling up there right now. It's still, weather's bad, but we may drill it. So we're kind of weighing our options there. Our other two projects in Nevada, again, I've got other majors that are interested in one of them called Bolo. And we may actually try and fast track that project into production. There's a nice zone in that project too. I said that you could produce, anywhere from 0.5 gram to 1 gram oxide material. There's a section in that deposit which is approximately 3.5 grams per ton, right close to surface. So that would be very, very profitable for a small producer to come in and just mine that and actually produce that. So we're actually talking to some companies right now, not majors. I think I said a major, but not majors. Just some smaller companies that have a good reputation, good people involved that could actually go in and actually produce that and produce cash flow for us. So we're talking with some companies about that right now too. As far as us buying more projects, one thing at a time. I want to move Kinsley Mountain along. I think that Kinsley Mountain is one of the projects that I think we could sell and shortly. And I've seen projects like that and that kind of grade sell for hundreds of millions of dollars in Nevada. Right close to 1 million. If we get close to 1 million ounces, right now we already have 500,000 ounces. We think that in short order we could probably get close to 1 million ounces, maybe more, maybe significantly more. And then that is very sellable in Nevada, and hundreds of millions of dollars. Considering that the company has a market cap of $26 million or $30 million, like there's some significant upside there for us and for investors.
So in concluding, and that's so perfect segue, I did want to come back to Kinsley. So, when I look at the kind of opportunity you outlined, it sounds so compelling in so many ways. And what I'm trying to wrap my head around is, obviously there was different leadership teams that had this same property in the past. I'm just trying to understand, was it that they missed something, or what I want to understand, what makes things different now that it's your team's leadership that's taken hold of this project? From an investor point of view, why do they bet on this project now versus in the past under previous leadership teams?
Okay, every project is a little bit unique, but maybe I could go back and explain that by talking about benchmark and thesis. Those two projects, they've been around since the 1980s. 40 to 50 years. They were drilled. Benchmark actually was in production, and then they're no longer in production. And And what's interesting is that the story with those those projects, and including our Williams property up north, is that they were looking for really high grade gold that was anywhere from 0.5 to 1 ounce material, not gram, but 1 ounce material, which is 15 to 30 grams per ton material. And if they didn't find stuff like that or close to that, they couldn't make it work. And the reason is because gold was $300 to $500 an ounce back then. So it's not necessarily that they missed things. It's just we're living in different times. And so these geologists weren't stupid, and it's not like they were incompetent or anything like that. It's just they were looking for something specific, and if they couldn't find it, and it wasn't economic back then. Matter of fact, there wasn't, up in northern British Columbia where those projects are, there wasn't oil and gas exploration up there. There is now. There wasn't roads up there, for forestry. Forestry was, just getting to that point. There is now. There wasn't a power line up there. There is now. So the whole economics of things have changed completely. Mostly the price of gold, and so it makes those projects that were not economic back in the day, now they're very, very, very economic.
Well, fair point.
So the more specifically with Kinsley, I believe that and it is the case that the company that owned Kinsley Mountain also owned the Long Canyon mine that was sold to Barrick and Newmont. And so when they had one asset that they're selling for $2 billion, and they've got this other one, this one doesn't, even though it's very, very good, it wasn't their main focus. And they had other assets that they were interested in working on. And so it just didn't become their focus, which is why I think that they rushed to put out a resource without doing sufficient drilling to really define it. And so that's why, we've jumped on the project. We've looked at it. Our technical guys have looked at it and went, this looks good. It's accurate. We believe it's accurate. It's incomplete. You just need to do some more drilling. And so having our and then the other thing that we did that has never been done before, ever, techniques in making discoveries, which is, has had tremendous improvement over the years. And so what we've done is we've flown the property with drones and with helicopters with various sensors on the bottom. I don't want to get into too much detail because, quite frankly, I don't know the details, so I can't get too technical. But with various sensors that penetrate the ground deep and shallow to help you target where to drill. And so what we've done is we've done that across the property, and we've done it right over top of these known zones where we actually drilled out, close to 500,000 to maybe 1 million ounces of gold, which is the Western Flank Zone. So now we know what that looks like as a geophysical signature. And so when we flew the rest of the property, we went, oh, there's another one over here, there's another one here, there's another one here, and there's another one here. And so it makes it easier for us to target our exploration drilling rather than just running out and poking a hole and hoping to find something. By doing proper geochem and geophysics, it helps us to narrow it down.
Very fascinating. Always enjoy these conversations. This was very educational, and thank you for not speaking too much, mining lingo. That's always one of the barriers to entry for any new investor interested in the space. I certainly learned a lot, and I'm sure people watching this did as well. And for anyone watching, actually, too, might as well highlight now that later this month, June 23, Jeremy, we're going to have you on stage at Deal Night in Vancouver. I can't wait. You're obviously a very compelling speaker. I think the crowd's going to really enjoy that. So I'm looking forward to that. So anybody watching this that is in Vancouver, wants to be there, by all means, feel free to come join us. Jeremy, just want to say thank you. This, like I said, was very educational, and I really, really enjoyed this conversation. So thanks for taking the time.
Thanks, Kevin. Appreciate it. And looking forward to seeing anybody in Vancouver that wants to chat.
Excellent. And if you can't make it, but you want to take a look at the stock anyways, just another reminder, if you're a Canadian investor, this trades on the TSX Venture Exchange, CPAU, for one of our American friends. We're trading over the counter, COPAF. Jeremy, looking forward to talking to you again. Thanks so much.
You take care. Thanks again.